All right, testing, 1, 2, 3, testing, 1, 2, 3. The rain in Spain falls mainly on the plains. The ants in France stay mainly in your ponds. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Good morning, y'all. My name is Wayne McDonald. I am the Chief FX Market Strategist for Tradersway.com. Thank you very much for being a client. If you have not yet joined our family, please visit Tradersway.com. Open up an account today. Give us an opportunity to earn your loyalty and respect. Do these webinars every single day, absolutely free for our community. Please visit Tradersway today. So how was your weekend? Blessed be the cheesemakers. By the way, Friday's video is right here on the website on Forex.Today. Feel free to watch. Also, while you're on YouTube, make sure you're subscribed so you get alerted to when I do these impromptu events live on YouTube. The coffee is like ripper awesome this morning. Taking a look at the week. Not much going on today. We have Case-Shiller tomorrow on Tuesday. Case-Shiller is not as important as before. Plus Shiller's from Yale. I believe Case was a student of Shiller's. And he came through and said, "Hey man, let's do an index of housing prices in all the major cities." And so they put it together, but Shiller never really did much nor cared for it. Now it's kind of just, it was important during the housing crisis, a lot less now. But I'm wondering if Shiller's more known for the Case-Shiller Home Price Index than for winning the Nobel Prize. Who knows? We have GDP coming up on Wednesday here in the United States of America. Some pending home sales and stuff. That's all good. Later on, retail sales in Japan. That'll be important. Moving on down to Thursday, German unemployment rate. Only 5.25%, huh? Then the Fed's favorite measure for inflation in the United States, PCE, coming out on Thursday. That's very, very, very important. Canadian GDP, that's going to be very important. More yen news Thursday night, Friday morning. Chinese manufacturing data, obviously important. So I'd say the yen and the Aussie and the Kiwi are all going to move Thursday/Friday morning. Bunch of news coming out of Europe, including their lack of inflation. They should call it the CPI lack of inflation report. That comes out on Good Friday or this Friday. Chicago PMI shouldn't be that big of a deal. Baker Hughes rig count comes out on late Friday, as well as Commitment of Traders report. We'll take a look at the most current COT data. Look at the net coming down and down and down and down and down and down, huh? What does this tell you? First of all, people don't want to, they're not buying euro. Longs are flat, shorts are relatively elevated. Which is strange though, right? I just can't, from this angle, I can't quite see it. Anyway, so no longs, but shorts increased, yet price went up. Kind of strange. No, Eternal Soul, the greatest deleveraging cycle in the last 100 years, is not something that occurs on a regular basis. And the way to think of it is there's a cycle throughout the day, there's a cycle throughout the week. Is there a monthly? I guess monthly cycles based on when CPI and GDP and all that, or CPI and other reports come out, and NFP, there's a bit of a cycle to that. There's definitely a seasonality cycle. Then there's a boom-bust cycle that lasts maybe 10 years. And then there's probably another one that is a super cycle of 100 years. So, when the entire globe deleverages all at the same time, no, it's not something I've lived through before. I ain't that old. That'd be part of a super cycle. What's interesting is we still don't agree on how to manage a capitalist economy. That's something the world is still trying to figure out. The Europeans did their European version of capitalism. Okay? And that seems to have failed. So we'll see what their next move is. Still don't know, Kudzi. Sorry. Oh, as far as as any country, yeah, that's just part of, that's called a business cycle. Eternal Soul, is that COD? Yeah, it's only been on Forex.Today, the top of the website, for 5 years, man. Yes, it's there. Gee whiz. Yeah, yeah, and I think it's beautiful. Take a look at Aussie. You don't need to log in for that. So net positions down, 23,000 contracts. Longs, shorts, not a lot of activity. Slight net up. No, not to get to this, not to COT data, you don't have to log in. Yeah, to post you do, but not to get the COT data. All right. Swing trade still setting up. Very nice, very nice. You see, not a lot of change technically to worry about. If you're a bull, the first whisper is going to be the 4-hour 21. It's not the ideal support because what it means is you're going to hit your target quick. I mean, you might think that's good, but it also means you'll have to get out quick, which is not ideal, I suppose. we still have not even really, truly even challenged this resistance area. Haven't even really made a serious effort. So, yeah, if it heads up here, maybe we have a chance. I would like it to drop just like I did here and then have it go up and use the benefits of true technical analysis, because the conservative technical analysis will mean that we'll have more bulls on the ride with us and it'll just be better. Okay, but there's no doubt you can kick off this 4-hour 21. Especially when you're slightly out of position. You're not dramatically out of position, but yeah, you could kick off that 21 if you're aggressive. Remember, the 4-hour 21, not the hourly 21. La 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 la. Kiwi. Sort of a better out of position trader. I suppose technically it's about the same. Finding resistance at the fair market value of the 200 EMA. Now that it's made a higher high, I would take the old high, drag it across. If you're just using price action, that would be your first opportunity to buy. Now, that's a little too aggressive for a swing trader. A swing trader would want it to come down a little more, but then that makes you vulnerable to things like head and shoulders patterns. But it shouldn't really be a head and shoulders pattern because it's not the top of an uptrend. It's a top of, that would be the top of a consolidation area. So you kind of still have to look at it this way. When you look at the market this way, it's still bearish, right? So it really comes down to your bias. If you're a bear, you're selling, and you would have already sold this actually. Okay, this is the sell zone for the bears, right? So bears thinking all the way down, and they're looking at it from this point of view. Down, 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 up, up, down, 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 up, up, down, 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 up, up, right? So now there should be a down, 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 down. At least that's what they're thinking. Okay. There is a pivot in there. It happens to be an M3, and that's the M3 is the one you want to sell at. That's a weekly basis, so the target on a weekly basis at best is 72. More conservatively, 72.70. Okay, so we're at 74. You might get, as a bear, your upside potential here, upside meaning to the downside. If you sell, you're looking at approximately 200 pips for the week. Can we look at Kiwi dollar? No. Oh, okay. You talked me into it. You can see on the CAD, bears have already done their thing. Bears were supposed to sell here at about 85.5. Their target is 84 to 80, 83.80. So sell at 85, going for 84. So 85.50. So there's maybe 150 pips for bears. Bulls are getting interested now. 85, so we're at 85.07. 85 is where bulls should start buying, between 85 and 84.80. Okay. So bears are down, 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 up, up. Bears are down, 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 up, up, down, down, down. Okay. And you'll say, Wayne, which one does this chart tell you it is? This chart doesn't tell me whether it's bullish or bearish. So you need to make those decisions fundamentally. Okay. So a swing trader, if you're a bear, you know, just by definition, this line here, 85.50 is that's just your mark. That's it. And bulls know that your mark's coming up, so you might as well kick off the psych level, hope for the best. Okay. 85, what did you do? 85.67? I don't even know when you're talking about that. I didn't even hit that for me anyways. Didn't want. And by the way, can you believe it? After having pneumonia and bronchitis for 2.5 weeks straight, I caught a cold. Not bronchitis, not pneumonia, just a plain old-fashioned cold. Sucks. So true fashion, I went for a multi-mile hike in the Georgia summer yesterday. Try to burn it off. Burn it off! Yeah, alone. Well, I'm a pretty tough guy, though, so it's kind of amazing. Anyways, if my eyes get puffy, it's not because I'm tired. So, Swissy, we'll just look at this just because it moves so well. It's not something I like to trade, but it opened at exactly the sell price. So bears, I mean, right? And I believe we talked about this last week, but now that it's happened, like, that is a triple top. You get the exact price to sell. You know, you would have to treat this as a range, which means your upside potential really is still down in here. Okay. Now, what's interesting is we can start pondering next month's pivot. So if you sold there, I'd probably even target down here. So I'd sell at like this 113. I'd be targeting 109.5. So let's just say 110. 110. So, you know, 300 pips. Okay. Now, bulls, you got to be a little careful because you have to make a choice. You have to buy on the dip, which in a range-bound market sucks. You know what I mean? The reason for that is you buy dips in an uptrend, you sell dip rallies in a downtrend. This ain't either of those, right? Could you call that an uptrend? Probably not, right? So really, a truly conservative trader, which may not be you, but a truly conservative trader would let it break out first, then grab a dip. But you might be hot to go HOTTOGO on a September rally, and you're like, yeah, this is it. So you'd kick off the 21, or you'd kick off this area in here. Let's call it the central pivot zone, 113. No. What is this? I'm sorry. 112.5, let's say. Not even lower than that. I guess you want to pick it up closer to 112. As close to 112 as possible, right? So you don't really want to buy it high. The problem is, though, like I'm saying, is if you buy it down in here, you're buying it in the middle of the range, which is not what you're supposed to do. But in this case, if you use your technical analysis, like, you know, ideally I'd love for it to do this. Hit the obvious resistance, great. Come back to the 4-hour 21, great. And then it takes off, which means it's an out of position bullish swing. Okay. But yeah, Swissy yen isn't a great one to be trading either. I agree with you, Barry. But that's how you would play that technical analysis, which is what I'm trying to teach. Did we do Aussie or did I skip it? Okay, yeah. Inverse head and shoulders, up, 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 down, down, right? So if you're a bull, you need to start buying it. Okay, that's that. Now you can see it created the lower low, lower high, but that failed to make the lower low. So now what you want to look for is, almost like a wedge, sort of a micro breakout retracement, long and gone type scenario. It's going to hit the shoulder. It's going to respect it. And then it's going to go to the top of the crown, probably respect that. And we'll just leave that. That might be today or tomorrow. Yeah, Raymond's in on the weekly central, which you're supposed to do if you're bull, right on. The funny thing is, your stop is only, 25, 30 pips away? Which means even a big move to the upside is probably not actually technically worth that much money, but we'll see. So you're in at 81, you're going for, 82. I mean, there's 100 to 125 pips. That's the sad thing. Or you hold it and you don't get out at all. You just hold it. Treat it like a carry. Oh, excuse me. Oh, gee whiz. Okay. Let's look at gold and oil. Oh, here's that Aussie again. So you can see it's all part of the plan, so to speak. If this area is not the top, then it's got to move. It's got to move now. If it drops down here and then goes up, then what it ends up setting is a sell at this area later in the week. Okay, so you want it to stay inside this trend line. So anyways, we already did that, so I'll skip it. Oil. Let's do oil. Okay. Oil's rallied from our bottom essentially to the top. So now we're stuck in here. I think it would be healthy to have a bit of a dip and then a rally if you're a bull. Okay. Bears, you're in your sell zone. If you just do not believe we're on our way to 70, yet alone 80. You have the monthly central in here as resistance. You have the weekly M3, which is your sell, right? And you're in a sell zone no matter what. So bears would look at this, drop into a smaller time frame, like a 15-minute chart. Okay, and this is your hour of power as well for oil, because futures have started to trade. Okay. So you would look for an opportunity here if you were a bear. You're in a sell zone, you just don't know if it's going to fall. So now you use your technical analysis to determine whether you have the pattern you're looking for. That's what you need to do as an analyst, right? Yeah, Barry, I've covered that quite a bit last week, the week before, so I'll just say I am still bullish on macroeconomics, and that would be favorable for higher oil prices. Okay. So once again, that's a longer point of view, right? It doesn't mean this can't go down today. So I'm asking you, if you are a bear, your analysis should show you that you're in a place that it's okay to be a bear. In fact, you're at the price you want as a bear. So now you use technical analysis for your tactical entry. Doesn't mean it will fall. Okay. Now bulls, they want to buy a dip. A great dip would be sort of down in this price. Somewhere around 67 would be a great price. Trump doesn't set oil prices. How about this battle with gold? Remember I showed you this? We were in a very dangerous spot. I called it a fib war. And I said, really, you don't know who's going to win that, so you should probably avoid it. And you could see there was much more downward pressure. A lot of people would have wanted to sell that, but I could also tell we were in a reverse fib. So in this case, the bulls did take over. The bears, actually what happened was the bears took profit down in here. So gold is moving up a little bit. And that might mean dollar will fall a little bit. If dollar falls a little bit, oil prices actually might go up. But it doesn't have to be a step-for-step, one-to-one today type correlation. Right? So what should happen here, if there's going to be a healthy reversal, it needs to go up towards the 55, down all the way down to make a double bottom, and then a higher high, higher low. But that would take the rest of the year to get all that on a daily chart. Okay? Don't think about it going straight up. It's going to come up, it's going to come all the way down, and then it's going to consolidate and then break up and then come back down. And so this is August, this is September. You know, it'd be full on October, almost November by the time we get a true technical reversal. Okay. Go back into euro dollar. Look what I did for you guys. We have the up, up, up into the resistance. We have down into the roll reversal and then up. And look what happened. Looks good. Looks like a good start. Isn't that pretty? Huh? Come on. Give me a little thumbs up for that. Guess I gotta go like that. But anyways, it's pretty, right? Thank you. Thank you. You're making my nose run. So anyways, right? You see how I looked left? So this is what I keep trying to teach you as far as price action, right? You make a higher high, you look left, you take the old thing, drag it across, it's your new buy zone. So this isn't the world's greatest breakout. So we're still hung up on this resistance, but it doesn't look terrible at the moment, right? Okay, so yeah, well, the problem with this, this inverse head and shoulders here is a buy. Yeah, don't make this a head and shoulders because there's no trend. I would still argue that This move here isn't a trend, it's a retracement. This inverse head and shoulders down here is a reversal of this trend. It was trending down. Now we're just trending back. Okay. So there's a bit of a difference. Can we do the 4-hour 21 on the... Okay, so you're a bull swing trader? Okay, let me look at it from a swing point of view. Yeah, you didn't get the pullback, so it's out of position. So yeah, try to catch the 4-hour 21. Yeah. Yeah, that seems right. Okay. La 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 la. How about the pig? This one has a lot less certainty, huh? So we knew this was our target on this rally. We knew this was a counter trend or get out type position. We knew this was a role reversal to buy it. Okay. What else do we know about this? Well, if you're a bull, it opened exactly on your buy price. And bears still never even had a chance to sell it. So you see that? A bull would have tried to buy in here. Whoever bought here would buy this. That's what this is all about. And their target now, if they can keep the rally going, is going to be their 130 to 130 and a half. So 150 pip potential here. Okay. Bears are going to be challenged here and then, of course, up there. So I think 129 is going to be well defended by bears. Okay. So be careful around 129. Did we miss anything? Okay. Remember, nat gas was elevated, but so was Brent at WTI. You said one of these is wrong, probably nat gas. Nat gas at least fell from pivot high to pivot resistance. Still kind of stuck in here. But we just covered oil, but I have oil here. I mean, I guess we could do it again. This time, I guess we could do Brent. Okay. Brent opened the week out of position. It's bullish in a bullish market, but that makes it tricky to catch. So ideally, you would catch a retracement back to the 4-hour 21, and even that's been difficult so far today. More conservatively, you'd like it to come back here to like 74 and a half to really 74. You know, you want to catch it closer to 74. We're at 76. So that's where you want to catch it, down around 74. Maybe 75, right? But 76 is not 75 or 74. So it's a little out of position. So you might not be able to catch it. This is going to be a test of your patience. And as I already covered, we opened today for WTI actually in a sell zone. So if this comes down, you'll get the retracement in Brent, right? And then you buy oil down here at 67.5. So let it fall $1. So WTI falls $1. Brent falls $1.50, and then you can, if you're a bull, you'd be able to buy both those, which means nat gas should go up for like the New York session or something, and then down. So if you're going to try to time the analysis and correlate it with this market, you'd get this to kind of rally up a little bit. And then you'd sell it. Because this should be, or has a tendency to be, inversely correlated to oil. So if Brent is going to come down, Brent is going to come down and up. And if WTI is going to come down and up, then this should go up and then down. Yeah, Frank, shouldn't matter that much, right? It's all the same. The one on the 15 minutes is just going to be more accurate because it updates more often. Okay. Cool. Well, please subscribe to the channel so that you're updated when I upload videos or do live events on YouTube. Please do that. I'd appreciate a thumbs up. Or really, as soon as I'm done broadcasting here, you can refresh your page and leave a comment. Even just a thank you would be really cool. So anyways, peace on earth. May the pips be with you. May our profits be above average. Please visit tradersway.com and open an account sometime soon, even a demo account. Test out our execution speed, our spreads, our world-class customer service. And then, of course, I'm here every day to help you. So thank you for being on my team. I'll see you tomorrow. Thank you again.